Hello, fellow traders. 'Tis I, the Rumpled One, coming to you Wednesday, April the 15th, tax day. The year's 2020. Let's talk trading. Stick to it. What am I talking about? I'm talking about your system, your trading plan, what you do, your strategy. You got to stick to it. And joining me today is Walmal. How you doing, Walmal?
I'm doing great. And traders, hope you had a profitable day so far, or about to have a profitable day if you haven't started trading yet.
Yeah, so boys and girls and fellow binary traders, no, or non-binary traders. These videos are for educational purposes only. Your results may differ from mine and Walmall. So trading is extremely risky. You can lose all of your money. If you need trading, investment, or financial advice, seek the advice of an accredited financial professional instead of a couple of guys with funny names on YouTube videos. So, and as you're trading, always have your stop loss in place. So your risk, you don't lose any more on one particular trade than you're willing to lose. And Walmart, so yesterday I was telling the traders about you sticking to it, and I didn't want to. I wanted you to tell your story, so why don't you let them know what I was talking about?
Well, today so far has been a very good day for me. In fact, this entire week has been a very good day. In fact, I've made so far twice as many pips as what my weekly goal is. So far, and we're only through Wednesday, and that's wonderful, and that's great when that happens. But last week I had a particular day where I lost 7 trades in a row, one after the other after the other. And you want to talk about something that messes with you from a psychological point of view? Man, it messes with your head. Does this method still work? Am I doing something wrong? What's wrong with me? And then what I did was I stopped for a moment, looked back at my trades, saw some things that I wasn't doing correctly, corrected it, and then started to go and play, I don't know if any of you play golf or whatever, but started playing a chip game. Chip away, chip away, chip away. And by the time the day was over, I had more than conquered, my loss, And I don't recall how much I was down exactly, but by the end of the day, I was up a pip or two. You know what? That's time to stop. And the reality of all that is that with my trading plan, that you allowed me to do this because I had a break in place that stopped me from trading, reevaluate, and more importantly, or just as important, is that when I was taking those losses, they were within what I was willing to risk on any particular trade. So what happened was I was still in the game. And that's the most important thing, is being able to be still in the game. And then the second part of it is, okay, jump that hurdle, and let's stick to the plan. Let's stick to it because we know statistically over time this will pan out. And, it did. And that was the wonderful thing about it, was that by the end of the day, not only was I break even, but I was up a pip or two.
Yeah, that's why you have to stick to it. And you can't. And the thing is, it's so easy to want to throw another indicator on the chart, or want to change something, or flip here, flip there. And as Walmart was talking, I was just kind of running through the charts. We see here we got a lot of ranges over 100 and a handful over 200. We popped out of the previous day's low here on the euro. We took out the pivot point. We went through the weekly open. We hit the weekly pivot. Green rats are feasting right now. The last ticket on that train, or on that ship, was at 108.76. We see we came through that weekly pivot. Remember, I talked about that. Let's see, today's Wednesday. I talked about it right here on Monday, and we got close Monday, reversed, but we took it out today. So those pivot traders were rewarded. We took out the daily pivot. We went through the upper wick zone, went through the lower wick zone, and now we're returning. And on the Walmart trade this hour, you see here, it opened right around 70 on my broker, dipped down and then in and out. And you can see here, it's almost about ready to hit 90. So there was like a 10 or 20 pip trade there. Nice and easy, simple method, horizontal lines.
You're exactly right. I mean, I didn't take those trades. I wish I had now, but they were just nice and easy. And I want to step back for a second, because there's something that you said, Tiro, that was so important. There is, when you're in the trade or you're in the middle of trading, that is not the time to start throwing another method up. It is not the time to start playing with other indicators. That's the wrong time to be doing it. Stick to the plan. Stick with what you know works, and trade your way through it, because it's not a time to go and start learning how to do something new. The time to learn how to do something new is when you're not trading. And because you haven't learned anything yet. How do you expect to go and be profitable if you're still just trying to learn something and understand how that new shiny indicator works? That's just the wrong place to be doing that. So stick to it. Stick to what you know works. And I know it's tough. I mean, after losing those 7 trades in a row, I'll tell you what. I think I was on the phone with TRO at the time, and it was like, oh man, this is horrible. And I was really, really down, but you just have to stick your way through.
Yeah, I've been teasing Walmal because the other day he said something about stress-free trading. So whenever we're in a trade and it's like going against us or it's slow, I go, yeah, stress-free trading, right? Oh, Walmal, tell the traders what you said. I wrote on a forum a long time ago and cracked you up.
Oh yeah. Well, a long time ago, somebody had written a post out there and just said to TRO, so you're basing your trading on one bar? And what cracked me up was his response, and his response was just one word, and that was yes. And what was being said there is what people don't get. What you're trading is price action. What you're trading is what the charts are doing in front of you. It doesn't matter what happened 3, 4, 5 bars ago. What matters is what's happening right now. So that's what he was conveying. And I don't know if that trader understood that or not. There was no responses after that. But yeah, you're trading the bar you're in.
Yeah, and it's it's just so funny that traditional trading teaching tells people don't be focused on your profit and loss. Read the charts. It's just like what, at the end of the day, I can't put charts in my bank account. I could print them off and put them in my safety deposit box, but it's that money, it's those Benjamins that is what we put in the bank account. So I mean, anybody that tells you don't focus on the money, I think you need to smile at them and politely leave the conversation.
That's exactly right. You can't you can't eat charts, but you can certainly eat pips, because that's what puts food on the table.
Exactly. And I told Walmart earlier, I said, when price was down here in the 60 range, I said to him, the way I look at price at any particular time, is it more likely to go to 108 or more likely to go to 109? And so I was taking some trades, I believe, wasn't it across the 75? I think I was taking a trade, yeah. And I'm thinking, from this point, I believe it wants to go to 109 more than it wants to go to 108. And that's just observation.
Watching what it's doing, watching what price is doing at this moment in time. Now, of course, it could be running up like it is right now and just turn around and pull all the way back like you just did on this 1 5-minute candle, and pull all the way back. But that's trading, and that's, again, it comes down to your trading plan. It comes down to your risk management. And that's why you have stop losses. That's why you have exit points. And that's what, I truly believe exiting a trade and your plan for getting out of a trade is much more important than the reason you got into the trade. And I know Tiro he went and spoke about this yesterday a little bit, and the idea that, let's randomly enter a direction. If you randomly enter a direction, if you've got a good exit plan, you will actually be profitable. But you need to be able to go and do that. Now, I'm not saying that obviously that, like this morning when the euro ran down so hard, you don't want to be going against the headwind of that. But at the same time, if markets like what they're doing right now, where I don't know if this is going to continue on this reversal back up, or if it's going to go and turn around, come back down, and set some more lows. So in this particular market, whether I go long, whether I go short, is less important than how do I get out? Because again, I can take a bunch of losses in a row and eventually get to some of those wins that go back the other way and make up for those losses and put me into profit.
Yeah, and I've been saying this for decades now. Rule of thumb, especially new traders, don't trade against the H1 candle color. Because you just look at it. Look where this candle started, and look where it is now. If you took that first trade at the line, yeah, it opened right below the line. In fact, you would have had to wait for it to pull back and then come back up to get in. But you see it's green at the line. If you just enter the trade, it goes with you. And then if it turns red on you somewhere down here before it hits here, you can exit out. But in this big 50 plus pip candle here, I call any candle like this would be a return bar. Chances are price wants to return to the open. And so you can see that candle opened at 109.12. So chances are price is going to want to come back to this level. So I told Walmal earlier, I go, I'm a green rat right now. I am not going short. And that's pretty much what I'm doing here is just looking for green rat entries. Actually, now we're way out of the rat zone, but where did I put the rat zone? Right here. We're already out of the rat zone, but I'm still looking, if price were to dip back and give me maybe a rat reversal signal on maybe say M5, for example, I would consider entering that trade long.
Yeah, and it's, there is something about historics that do help you. Like right now, price is struggling, and it's struggling at the low from 2 days ago. But that's not the end all of all things, because the thing is, it may bounce off of that, or it may blast through it. And as traders, we don't know. But what we do is, based on what it does, that dictates whether we go long, we go short, or we exit, or we don't exit. And that's what we have to depend on is what price is doing right now at this particular horizontal line that we drew on the chart.
Right. And here, 2 bars ago, 59 pips red. Last bar, 20 pips green. This bar so far, 29 pips green. I mean, that's a lot of pips. And you just need, let's see, your daily goal's 10, right?
Yes, sir.
Yeah. So, I mean, that in the last 3 bars, including, this bar, I'm looking at what, 108 pips?
Mm-hmm.
And you only want 10. I mean,
yeah, you're talking about less than 10% of that. You're looking for less than 10%. If you can grab 10%, on something like that, you're in the money.
And so, the thing is, it's like, stick to it. I mean, we've got the Walmal method. I sent it out as a freebie. You guys can use this if you want. You can, or not. But, it's very simple. As you can see, yeah, I got a couple of statistical indicators over here just to help you out. But for the most part, we just look at the previous 4 H1 ranges. We're looking at the current range. And once you see this get to the end, maybe you want to exit the trade. So from about here to here, you could see you hit that 20. And then it's like, well, that's what it did last candle. So anything else, but then it starts pulling back. Maybe you exit the trade and you left some pips on the table. Doesn't matter. Because, fellow traders, what matters is it's not what you trade, it's how you trade it. So go out there and drain the banks. and subscribe if you